Thanks very much, Paul. Thank you, everyone. Thanks very much for joining us. As Paul mentioned, we're going to be hearing about institutional investors and how they're using technology to make better decisions. And given how much of the commercial real estate world in particular is owned by institutional investors, that's an absolutely vital topic. And we're going to hear how they're investing in it, utilising it, and using it to change their businesses. And we've got a fantastic lineup for that today. We've got well over $100 billion of real estate investments out on the stage here. So a phenomenal panel to talk about that. I'll ask you all to introduce yourselves very briefly so our audience can learn a little bit about you. Keep it short and sweet as we are on a time check. Madeline, we'll start down the far end. So just tell us a bit about who you are and what you do.
Yes, so I'm Madeline. I run the European real estate team at GIC, which most of you will know is the Singapore Sovereign Wealth Fund. So we have a pan-European portfolio all run out of London.
Tania, Bontemps. I just came over from Paris. I'm head of Union Investment in France. And I'm working for Union Investment, which is on one of the largest, I would say, investment managers and asset managers in Germany.
Jonathan Avery, Legal and General Investment Management. I lead technology and change for real assets.
Alison, Puhar. I work for Fidelity International and I head up their UK real estate practice.
I'm Audrey, Klein. I work for CORESTATE Capital. We are a pan-European real estate company that focuses on student accommodation, service apartments, and office buildings. I run their international institutional group.
Good stuff. Thank you very much, everyone. And we're going to start with a bit of wish fulfillment, basically. So, and this will be particularly interesting for any technology companies out there who are looking, to find out what kind of big institutional investors are looking for from technology. So I'm going to ask, what are the kind of technologies that don't exist? We're going to talk about the ones that do exist and how people are using technology, but what's out there that doesn't exist that yourselves as institutional investors managing billions of dollars of institutional capital wish kind of were out there and would solve problems for you in your businesses? Audrey, I'm going to start with you for that one.
Okay, so we started in 2006. During that time, we've grown to a 27 billion AUM company. We've done a lot of that inorganically, so by buying companies. And I can tell you that my one wish would be a technology that would seamlessly integrate all of those companies so that we're all talking to each other. That would be my one wish.
Good stuff. We'll go down the line and then make it a bit more freeform. Alison, what would you, if you had your magic wand, what would you conjure up?
Clearly, bearing in mind I'm out on the road a lot, a teleporter. But, if that's not going to be possible in the next 10 years or so, then I think what I'd really like to see is a proper database of investments that are marketed so that you elevate the role of broker to advisor. And I know there's lots of people trying to crack this one, but I don't think we're there yet in terms of the data being integrated.
John, from your perspective?
Yeah, so I guess no single platform. I think it's integrating them together. So from planning, having a CAD model that understands the planning rules in that area to make planning quicker. That then goes into a distributed ledger, so it's recorded. And then supply chain can come along with their warranties and the kit fit out. So it makes the occupational element easier going forward as well. So I think it's a combination of things and how we work together with that technology.
Sure. Tania and then Madeline.
Yes, as an open-end real estate investor, we have over 400 properties to manage. And on the one hand, we have the portfolio management, and on the other hand, we have also development projects, investment opportunities. And now we have to go into different applications, different software programs every day. And what I would like to have is just to have one integrated access, one integrated solution, like a seamless, process to have in one click access to all my market data, portfolio data, and not have to go every time to use different applications, and cross the information.
Sure. And Madeline?
So I actually got two. The first thing is we sit on an awful lot of data. Our portfolio is very broad. We've got investments in all different asset classes. And I just know we have so much data that sits underneath that, whether it's turnover data on shopping centres or footfall data or rent historic data. I would just love some technology that could help us mine that data and tell us some stories and really get some insight from the bottom up, from the portfolio, I think that would be amazing. And that would really help us inform our decision making. So that's one of the things that I'm thinking about. The other thing is on the construction side. I think we all know construction is like 13% of GDP, but it's only had 1% of productivity gains per annum over the last 20 years. So that sector, there's a lot that could be done, and we'd love to be able to build buildings faster, more efficiently, greener, higher quality, and lower cost, right? So we have actually invested in a company in the US called Katera, which is doing, some of you might have heard of it, it's doing home building in the US, where they are effectively, I mean, it's not particularly new in that you're manufacturing off-site and then bringing it on-site, but it's using technology to improve and enhance that process. So if we could see some of those technologies coming through to the construction side, that would be great as well.
Just to follow up on that, they're obviously massive in multifamily, Katera. Do you think that kind of modular technology has an application in the commercial world as well, where buildings are a bit more bespoke?
It's got to have some application, hasn't it? It really does have to have an application. I'm not a construction expert, but you just look at the processes in construction, it's definitely got to have some applicability. And I think if we think that it hasn't, then you're just ready to be disrupted, aren't you?
Sure. So any technology companies out there you go. You've heard what the kind of big investors want from you there, and a word that cropped up a lot there was kind of integration and creating cohesive solutions. That seems to be an overarching trend. In terms of the technology that is being used and how that's changed, the businesses you work for, John, how has kind of in the last sort of 3, 4, 5 years, the role of technology in the institutions you've worked for change, and how has it sort of made businesses better, and how are you using technology differently?
I think it's probably better to say what hasn't changed, because we're changing so much. I think we were given the opportunity that we could actually sit back, not rush out and buy a solution, and actually look at the way we work and where our roles sit in the sort of hierarchy and supply chain. And we've taken that and we've created our operating model from there, and looked to find best of breed technology around that, but centralising that all around the data warehouse, so we can bolt things on and let things innovate, but still have that core data and try and bring all that data together. And maybe it isn't just having one system, but maybe it's a view of the data that you're trying to achieve. So we're on the path to delivering that. And
how is the organisation? Your role is one that probably wouldn't have existed, maybe even 3 years ago in the real estate world, sort of platform and change head. Sort of how has the organisation of a big institution like Legal & General changed to kind of take in these kind of these new ways of working?
So I think it's just looking at those specialists, but then it's being able to empower me to get teams that devolve that sort of task away from fund and asset managers. So I have said before that surveyors aren't data analysts, they need to be doing other things. So you bring that together into core teams that can service the front office, and then you can become experts there. And then we've also recently been able to create another function, which is a knowledge cell, that's looking at more deeper insights rather than just collating and curating that data.
Sure, and you talk about the kind of non-specialist thing. How do you kind of, because we all know it's layman to a certain extent. You're sort of real estate experts, not expected necessarily to be sort of technology experts as well. So how do you kind of make those insights, even understandable to someone without a background in data science, technology, etc.?
It just goes back to the core requirement. What is the front office or people trying to understand and do? You then take that back, and when you find vendors, they might all trying to be doing the same thing. And it's really from the technology people inside real estate companies to push back and say, look, that's not how the guys work. This is what we're actually looking for. You need to make it easier. Your product might be great there, but it's not going to be adopted by the front office. That's not where they work. So it's understanding where in their task they're going to use the tool and then have the feedback. So then it makes it easier for them to use long term.
Sure. Alison, how about you at Fidelity? How's your sort of day-to-day life sort of changed as technology's evolved in the past few years?
Well, I think we've been very fortunate, because when we set up the business, it was only some 12, 13 years ago. And we were able to get in from the start and have everyone buy into the idea of golden source data, i.e. getting the data right at the very lowest granular level. So we've got that length of history of granular data, and the improvements that we've made have been incremental to start using that data better. So in fact, we do have a portal that brings together market information, tenant information, valuations, all in one place. It's not quite single-click sign-on, but at least we know it's all there. So that's one of the ways that we've thought about how we've brought systems together. And one of the things that is new, though, over the last couple of years is we've brought together under one group within research quants, data analytics and systems. So obviously the head of that has a very long job title, but I think it's important to be able to bring all of those strands together.
And again, sort of how is that transmitted and translated to you as a real estate professional that doesn't necessarily have a sort of specific background in that kind of, do they produce reports, and how do you apply it to the day-to-day process of going out and buying buildings and renting them?
The team sits adjacent to my team, so there's very much a daily social interaction. Ideas as they're developed are discussed. And going back to what you said, it's really important that the users get involved. And because a lot of it's been built up in-house, we've got proprietary systems, it's been driven by the end users saying, well, that's not interesting, or that's really useful. And I think that's enabled it to be better. Also, as the data has built up over the years, you might have had people who, let's say, weren't very interested or adept at using the systems. But as soon as you suddenly realise the richness of what you can get out of it, people are more inclined to put good quality data in and use it.
Sure. And how would you say it's improved things? Is it about assessing risk? Is it about speed to deal making? Is it about making more informed decisions? How has it improved? We know how you use it. How has it improved?
I think for us the focus has been on risk. So we always say we don't just look at return, we look at risk. One of the systems that we have is about income and income risk forecasting. Out of that, we develop a range of returns, a shape of returns, by running lots of simulations on future cash flows, taking into account market volatility, tenant default rates, and a whole load of other factors. And we can only do that because we're using technology to do it. You certainly couldn't do it using traditional surveying ways of back of a fag packet. And for that, it means we get an answer that's far more robust, can give us an envelope of risk and enable us to work out whether property A or portfolio A or B is the right thing for us to focus on and go and do some more due diligence on.
Sure, and just one last thing. You talked about that being proprietary kind of in-house technology. Why did Fidelity sort of build that in-house, right? Was it just that the solution wasn't out there in the market to buy in?
It didn't exist. It didn't exist. And the background of the people who worked on it within the team were from credit agencies, and we did a lot of liaison with other parts of Fidelity. And what we wanted to do was make sure, and partly for compliance reasons, that the real estate function at Fidelity was able to integrate with the other functions so that we can, at the click of a button, say what our exposure is to certain companies across the globe, whether it's in equities, fixed income, or real estate, for example.
Sure. Madeline, you talked earlier about investing in Cotera, and I think for GIC, sort of investing in PropTech is a fairly sort of new initiative. Talk us through sort of how you invest, why you've decided to invest in technology companies, and how that sort of strategies work, sort of playing out for you.
Okay, so we've looked at it in a couple of different ways. One thing we've just looked at is we really need to build awareness. We really need to know more about what's happening in PropTech, what some of the innovations are, so that we're better informed. So we set up a global team which is resourced from each region, and one of my colleagues, Sandra, is the Europe rep. And then other people in the team, a couple of other people said, oh, I'd like to get involved in that as well. So we've kind of done it from that perspective to try and improve awareness and just be more forward-thinking. And what we found is that in some of the markets that we're invested in, with more of the emerging markets like India and China, the take-up rate has been much faster. And so we're just trying to make sure that we level out globally and that we try and be more aware. So I think that's one of the initiatives that we've been doing in Europe. Then if I look at what we're actually investing in, we've kind of looked at it in two different ways. One is what we call offence. So that is being tagged to the right investments that have got the right demand drivers, the right, we're tagged to the right secular trends. So we're looking at how we think that data and technology is going to change things, and making sure that we've got our portfolio positioned to take advantage of that in 5 years' time. So given a couple of examples there, we have been investing in co-working more. Obviously that trend, which everybody knows very well, about people wanting more flexibility and shorter leases. So not only are we making sure that our buildings will take on co-working tenants and not be too hung up about covenant strength and all of that, but also so in Europe we're working with our partners to be open to having co-working tenants there. And then in Asia, we've actually invested in a co-working platform, a group called JustCo. And so we're learning from them how they're developing their business partly through what they call enterprise clients, the people like us or Deloitte or PwC or whatever, who like to have more project contract space they can flex in and out of. And then obviously the more traditional SMEs that you think of alongside co-working. So that's our offence strategy. And then the other side, we're talking about defence. So looking at the existing portfolio, how can we make sure that our portfolio still stays relevant and doesn't get disrupted and left behind by some of the changes in technology? So there, we're really working with our partners to make sure that we're looking at building apps that tenants want for their buildings, or in retail, there's a lot of talk about retail and how that's being disrupted, but are we working with some of the newer platforms like Appear Here and things like that to make sure that we're offering the right offer?
And how is that structured? Does that come out of a pot of PropTech money that GIC has, or is it kind of from the...
So we also have a pot, but so all of those two are those are not a PropTech money pots. They are GIC's investment mandate pot. It's our portfolio capital, but we also have a separate pot for PropTech pot, which we're putting more into a kind of seed capital type approach, more piloting. We hope we make returns on those investments, but we recognise it gives us a lot of other value by getting to understand the underlying sector, the trends, the innovation, and then within our portfolio trying to find ways for those companies to pilot some of their technologies with either our joint venture partners or on our own assets.
Sure, and Tania, I know Union's invested sort of directly into PropTech as well, so tell me about how that works over at Union.
Yes, we have been now working with many PropTech companies in the past years. First of all, we did an assessment that we wanted to be closer to our tenants, closer also to our customers, and we inspired ourselves from the retail and hospitality activities, where you need really to understand your customer and your end user. So what we did is to try to get closer to PropTech companies actually who can offer these kind of solutions that our tenants and our end users are looking for. So how to come closer, how to become more familiar with these new technologies, either by trying them. We did a lot of pilot projects in the past, trying different platforms and technology solutions. And on the other hand, we also invested in PropTech companies, and we have been sponsoring for a couple of years now the PropTech Award, which is an international award where there are over 100 companies participating in Europe and the US, and this is over 30 countries almost. And thanks to this Property Tech Award, actually we can get really close to new technologies, try to find more about disruptive models, and also invest after and take a stake in these new technologies and new companies which are coming onto the market.
And give us a few examples of the companies that you've invested in and kind of why you picked those investments.
So, for example, there's Architrave, which is a smart database, intelligent database, which actually won the second prize in past year's PropTech Award. And we were so convinced about this new technology and about this intelligent solution, which is to manage your database and your data, so you can structure it and organize it in a really smart way, that we took a 13% stake into this company, and so we are actually investing in these technologies. And on the other side also we discovered many other applications and solutions where we have been running some pilot projects about service applications, asset management tools, other devices, predictable analysis devices, and energy saving applications. So this award actually helps us to discover what is going on the market, and then also to apply it to our business and our portfolio.
Sure, and obviously the skill set required to invest in a company, the sort of VC skill set, is very different to the skill set from investing in a building. So did you hire specific new people to kind of undertake these VC type investments, or is it the kind of existing team? Sort of how do you kind of, how do you again sort of build up the skill set to make kind of sensible, profitable investments in technology as opposed to, the historic skill set of just buying buildings?
For sure, you need to build up a really qualified and expertise team, and it's very important. We hired IT engineers, and you need scientists. We have a CTO now, and we have a whole bunch of experts who are specialized in particular fields. And since we have digitized all our value chain of the building, then we have experts for blockchain, for asset management, for valuation, and there's a whole bunch really of know-how which we have been building up in the past. Because it's much too complicated and it needs time. And on the other hand, these people also work very closely to the operational teams. And we have a lot of workshops and a lot of seminars and projects together with the IT people, actually, because sometimes they speak another language, and you need to make it understandable for the operational teams, for the business teams.
Sure. Audrey, you're a big sort of investor in beds in all their forms, student accommodation, sort of residential in all its forms. How do you see sort of technology influencing those sectors that you invest in, those, as I say, sort of bed-based sectors?
Sure. So we have the largest student accommodation portfolio in Germany, and we've learned a lot from that. So we're going to other countries, and we've really been exploring different technologies to help us source data and analyze it from students from all these different geographies, because there are big nuances, as to what students want country to country or even region to region. So we have been exploring technologies that help us understand space as a service, and just kind of analyzing the data of what students are looking for. We've done that as well in our service apartments portfolio. So we have the largest service apartments portfolio in Germany, and we're expanding out into other countries. And there again, we're exploring different technologies to help us analyze data and related footfall preferences of consumers in that space. And it's very useful. We haven't really zeroed in on one technology, but it's helping.
Sure, and how about, and so in terms of how you utilize that, is it about kind of mitigating risk? Is it about building up AUM and doing more deals? What kind of thing, how will it be applied and how will it be useful, do you think?
No, it's about developing a better product, at this point, so student accommodation and the service apartment sectors are mature industries in the US and in Asia. And there's no clear winner in Europe. So we're trying to develop the best product that we can, and that's why we're using the technologies. So we're very much aware that CORESTATE is not necessarily a household name anywhere right now.
Sure. In terms of, we've heard at many of the sessions today across both stages about real estate being, sort of slower than other industries to adopt technology. And I'm playing devil's advocate here. Some people would say that institutional investors are among the slowest within real estate as well. So how do big institutions like yourselves with profit margins to make, kind of invest in technology and adapt the sort of culture of sort of, the more sort of nimble technology companies. John, how can the kind of big institution kind of bring in the culture of the startup and sort of adapt to it profitably?
I think we have to have a considered change when we're doing any expenditure. I think through the engagement we have with PropTech, trying to understand from them how we can work more agile, I think that really informed our operating model. So it's having that core database where we can put some core institutional type systems in, then leave it open so we can let people innovate and plug those in to try and drive insight. But I think it even goes for the big boys, when we're trying to come up with data security and our requirements. Even the big boys have troubles, trying to get to the certification level we need. And then it's education for the startups. So it's an equal problem. I think a lot of people are going from legacy systems to the new architectures. But I think with the fragmentation of the system as well, or the ecosystem, there's going to be a lot more legacy coming forward, especially in a transactional market. You might decide, this is our architecture, there we go. You buy a building tomorrow, and it's got something completely different in it, and you need to understand how to integrate that. So I think it has to be considered, and it's really having that core understanding centrally how you can actually adapt and flow with the challenges and new opportunities that arise. So you have to be quite agile.
Sure, and Alison, again, for you as a a company that again has a sort of profit motive and profit margin, how do you kind of incorporate those kind of investments and the sort of practices of the smaller companies? Is that possible, do you think?
I think for us it's less about worrying about the profit margin because of investment in technology. It's more about working out how you fit real estate, which is not homogenous, into systems that can talk to and make sense with other assets. But we're seeing that clients are wanting this more and more, and there's a risk that real estate gets bypassed and doesn't even go in the bucket in terms of asset allocators if we can't make it understandable within a system that they can actually model the data. So I think we've got to continue to invest. And we do have parts of Fidelity, so we borrow skills from other quants teams who look at the data we've got and come up with clever ideas on how to analyse it. We have other parts of Fidelity which are used to technology and change. Retail investors who use the Fidelity website, they expect it to be brilliant and they expect it to be keeping up to date. And there we look at kind of pace over perfection, although I always think that Fidelity always wants perfection as well. So it's never quite as pacey as we'd like it to be, but there's people who are used to making changes and that helps us.
Sure, and Madeline, you mentioned retail earlier, and that's obviously a sector that's been hugely disrupted by technology, and you've sort of taken advantage of that. You're big investors in logistics, but in terms of retail itself, can technology kind of save retail as well as now that it's sort of killed it to a certain degree? Can technological innovation kind of bring retail back to life, do you think, or is it about it being kind of repurposed as something else?
I guess I wish we all knew the answer to that question, and we'd be quite happily going out and buying retail listed companies at big discounts to share price, NAV, wouldn't we? I think that there are certainly technologies that are interesting for retail, but I think you do have to recognise that they're going to involve quite a lot of capex as well. And so as investors, we have to be prepared to invest in those centres and maybe look at alternative uses that will work well in those centres. And I think that the whole trend towards healthcare and a bit more like we have in the continent, in the continent shopping centres have more healthcare, doctors, dentists, that kind of practice around it. I think there'll be some shifts in those directions, and using technology to try and figure out the customer demand profile will help make the right decisions. But I think it's not just retail. I mean, if you look at the hospitality sector, we're quite heavily invested in that hospitality sector because we like the trend of more travel, more sort of growth in travel, both business and leisure, and in Europe particularly. And we've just invested in a company called Citizen M, And one of the things we liked about that company is the way that it addresses the business from a technology perspective and using technology to understand the customer. So as you check in again, it knows who you are, it knows what kind of lighting you like in your room, and all of that kind of stuff. It's seamless, it's a very easy check-in, check-out, and then using technology to make sure that the services and the kind of cafe, that type of offer is exactly what people want. Then as an investor, the reporting that you get is fantastic, and it's all, it's great. But I think when you're in a new business that you're setting up, the technology that's available today, that's a great advantage, whereas in some of the older businesses, we really need to invest in that technology to make them more efficient.
And how applicable is that kind of hospitality style technology to other sectors like office? Are we going to have, because we hear a lot about, everyone's desk being the right height for them and the air around them being the perfect temperature. How realistic and kind of desirable is that extension of that kind of personalisation to the office sector, do you think?
So actually the most interesting office that I've seen recently is the new Deloitte office that's just opened up. Their new HQ, it's amazing. If anyone gets opportunity to go see it, I would. But things like, in car parks and shopping centres, you have those red and green lights that tells you where, if a space is free. Well, in Deloitte, they have done that with desks. So when they're hot desking, so you arrive on a floor, you know already where, there's spaces and meeting rooms and breakout space, and whether the table tennis table's free and stuff like that. And you can see that with your app, and it's using your GPS data to monitor where people are in the building. It's really, really interesting.
And do you think in future will that become the standard? And sort of follow-on question: are occupiers willing to pay £5 a square foot more for?
Well, I understand they it's their own bespoke technology, but certainly if an organisation is willing to invest in it, you would imagine that means it's got value. And as a landlord, if you can invest in that and make your building better than the one next door, then that's got to be a competitive advantage. So both cash flow, resilience, and then should it go to rent? It's the same argument really on co-working. Will occupiers pay more for flexibility? And I think we see that they will.
Sure, and Alison, I know Fidelity's been a big investor in kind of regional kind of non-capital cities around Europe and the UK. Is that kind of fancy pants technology? Is that gonna be sort of desired and again applicable in sort of locations that are not necessarily secondary, but not capital cities, the HQ of massive multinationals like Deloitte? Do you think that sort of technology will become standard?
I think it will. I think a lot of the technology relating to sort of desks with the red and green lights is part of tenant fit-outs. It's a tenant choice about whether they put that in. But you've got to make sure that the building itself is capable of delivering that, whether it's in terms of the power availability or the connectivity. And we do see in regional offices starting to elevate in terms of expectations, just on what we consider the basics of shower facilities, changing facilities, bike racks. We're actually making sure that our buildings have appropriate cycle scores, building well-being whenever we're doing work on them, because I think it is appreciated by tenants. And I think occupiers are making decisions based on the well-being for their employees, the attractiveness of the environment, and they're willing to pay, perhaps not £5 a foot extra in the regions, but certainly at least £2 a foot extra, and that'll make the difference.
Sure. Paul, I got the 5-minute signal about 5 minutes ago, so I presume we're ready to go to questions now.
Absolutely spot on, yes. Fascinating ground that we've covered, yeah. There's already a very eager hand at the front. We do have roaming mics. If we have one on the front row here, if we get the mic to them.
So thank you for the talks.
You've just introduced yourself, so
yeah,
your name and where you're from.
I'm Edmund. I've been doing real estate all my life. Used to work for Colliers, now work for PropTech in residential real estate. But I have a kind of a question for all the panel there. Do you see crowdfunding coming as a danger to your institutions? I know it's not yet there. It's still, in small investments and this kind of things. But we have seen lots of disruption in fintech, where banks are struggling, especially the retails. Do you see big investors in real estate have some kind of danger from crowdfunding, so people start investing directly in car parks or thanks to technology. We've seen some platforms like British Pearl, for example, in UK gives you the option to buy just some.
Pick someone to answer that, because they're not going to choose to answer that themselves, I don't think. So pick someone.
So I guess the idea is, we're looking at structural long-term capital mainly on most of our funds. So it really depends on the fund strategy. And I think we're using all the tools available for each individual sector, or to get the understanding of the market. And you've got to remember we've got all that history data as well. So we can sense test market changes as well. And backed, I guess, with research, we have fed in, and we have loads of specialists in research looking at that. So there'll be a structural requirement that will need to be delivered. And I think patient capital from institutions can deliver that.
Anyone else as investors, anything that keeps you awake at night, sort of worrying about disruptions to your business?
The only point I'd make just very quickly about crowdfunding is the FCA, who are the regulatory body, I think wouldn't be very keen on it. So I think that's one thing that we need to keep an eye on, is whether they become more relaxed about that, which could be another way of people making investments, as they have for many years in their own pensions.
Okay. Well, and I just want to add on to that. So institutional investors make decisions based not only on the product but on the manager, and so it would be very hard for a technology or crowdfunding mechanism to know exactly what's going on inside of the manager, so is the management stable, et cetera. That's another part of it. So I'm talking about investors that are writing checks for 100 million or more.
Can I add to that then? Do you, as a manager, are LPs sort of asking, what is your technology? Do you think technology in and of itself will become a differentiator between successful and non-successful? What is your technology strategy? How are you using data and AI? Is that a question you're being asked by LPs yet?
Not yet. They're more concerned with our ESG strategy.
Okay.
It's good for the world.
I think it's interesting that Crowd Property in the UK just raised 100 million for development finance. They're online crowdfunding, but there's people behind it that sit and appraise the developments from an institution, although they didn't name the institution, so maybe they're starting to look at it.
This is discussion. So when Revolut start working, they said, oh, what's Revolut is going to do? It's going to do some payments. But now people don't keep their money in the bank account anymore, but they keep them on Revolut. So Revolut starts, making investments, sells insurance, and all these kind of things. So at some point, people that have been bringing money to pension funds, they might go and see a platform where they can still trade their shares on real time there. So they buy a portion of one big shopping center, and then they have the options to buy it, get the interest every month for the rent that is being paid for that, and as well they can trade it on real time. So after 6 months, they buy it, they see that the shopping center is doing better, they sell it on real time to me or to another person. So this is technology just makes it possible to trade, like partially, even small investments on the whole investment. And to answer is there's still going to be managers there, to check and to see how the investment is performing and everything, because
I think
people need to see this kind of stuff.
Where you've got a point is where there's strong cash flow. I think where there's cash flow, it's easier on crowdfunding. In your example on credit, that's where it's going to be backed by a cash flow to pay in. Where your cash flow is not there and you then need to invest more capex along the way, I think that could be challenging. But if you've got enough cash flow from the business to run the business, then only your dividends and your distributions are at risk, then you can see that it could work. So certain assets, I think crowdfunding could work.
Okay. Cadre is an example, isn't it, in the US of what you're talking about, the big Goldman-backed platform.
And we see quite a lot on the credit side, actually.
Yeah.
As an individual, you can go in and you can buy units in a loan that's being made, but then you just need to make sure that you're making the right bet, that you think that what you're lending on will repay you.
Okay, want to continue outside when we finish after this session. We've had a question on the app, on the live Q&A section from Alistair Meek. What return on investment models do the panelists use to decide on PropTech investment? Anybody want to take that, or even talk about the general principles of how you what the sort of shape of those boardroom discussions when you're looking at investments?
So what we've done is we have gone with the VC funds, who are actually the ones that are then backing the individual PropTech companies. And when we talk about it with the managers, the philosophy typically is we think a third of them will fail, a third of them will make the target return, and then a third of them will do much better than that. And to me that seems like kind of a decent approach, because it's very difficult to tell at the outset which ones are going to be successful. So you have to be prepared for some failure, but at least we'll learn along the way. So being pooled in a number of different underlying technologies, that really works for us.
Anybody else? Yeah.
So we also have a similar approach where we'll use those venture funds out there to get into the seed rounds and look for the Series A. But we have to look at seeing where we can use it internally, if we can have an influence on where these help these companies grow, and that's our real value add, and it really fits in within our strategic goals. And then we'd bring that in, and something like Wired Score is an example where we've used it for 2.5 years. We're helping them currently on a new area, and that's where the Series A came in. So we can see that working within the business.
Great, thank you. Thanks, Mike. If you join us in thanking all our panellists, thank you. Thanks, everyone.